Kenyan borrowers currently grappling with the high cost of living should brace for tougher times ahead, as they will have to part with increased interest rates to access loans from lenders. This follows an increased base lending rate to 9.5%, a rise from 8.7%. However, Central Bank of Kenya CBK Governor Dr. Njoroge says it will take about 3 to 8 months for private sector credit to be affected.
So, for instance, it takes something like 3 to 8 months for the impact of that MPC decision to impact or to affect credit to private sector. So 3 to 8 months. So you'll have to wait that long, before you begin to see taking initial sort of reaction.
Meanwhile, Kenya's overall inflation increased to 9.2% in February 2023 from 9.0% in January, mainly driven by higher food prices.
Actually, for the non-vegetables, inflation went down from 11.5 to 10.8. However, vegetable inflation went up. So basically, we have identified vegetables as really the contributor of the, let's say, the variation that we saw from our projections.
Food inflation rose to 13.3% in February from 12.8% in January, mainly due to increases in the prices of vegetables, attributed to dry weather conditions witnessed during the period.
We missed it because of the abnormally hot and dry February and March, the first half of March. That's really what drove the prices of vegetables up.
The survey in the agriculture sector also revealed the prices of some vegetables were expected to increase in the next month.
And consequently, we scaled down agricultural growth, which has brought down overall our projection for overall growth in 2023 to 5.8%.
Nevertheless, respondents identified high input costs, unpredictable weather patterns, as well as transport costs as the major factors constraining agricultural production. Additionally, fuel inflation remained elevated at 13.8% in February, largely reflecting the scaling down of the fuel subsidy and increases in electricity prices due to higher tariffs. This notwithstanding, CBK maintains that the banking sector remains stable and resilient, although the number of loan applicants have dropped to 11.7% since February, compared to 12.7% last year December. Persons struggling to settle existing loans have risen to 14% in February 2023, compared to 13.3% in December 2022. Harriet Chimea, K24.